Good morning, ladies and gentlemen, and welcome to the YOUGOV PLC half-year results investor presentation. Throughout this presentation, investors have been in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Stefan Shakespeare, CEO, Alex McClintock, CFO, and Sundip Chahal, COO of YOUGOV PLC. Good morning.
Good morning. Thanks very much. And hello, everybody. Just going to go through the key highlights. We've had revenue growth of 3%, which is actually 9% on an underlying basis. You'll hear more about that in detail from Alex in a bit, with a strong sales pipeline, which is weighted towards the second half of the financial year. So the last few months have been particularly strong sales months, and it is especially in the product side that's been particularly strong. So again, Alex will update you a bit on that. We have seen record sales in 2020, in December 2020, with lots of momentum. One of the highlights of all that is that we have several multi-year contracts secured in those last 3 months. Now, they often take a longer time to win because they are bigger commitments. They're really big contracts with really large global companies. They're not quick wins. You work at them, and that accounts, if you like, for a little tiny bit of the flatness there that we have seen at the beginning of the 6 months. But that is now working its way very nicely through into a very strong pipeline. Underlying profit is up by 15%, and the margin of 14.2%, in spite of absorbing increased non-cash share-based payment charges. So this leaves us with a good net cash balance of 27.5 million, with strong cash conversion. And we continue to be a business that is investing in the future. We have a lot of investment going into panel and technology. We are a technology and panel-driven company. As we put more into this, as we invest more into this, we become a stronger and more profitable company. So this is a confident investment strategy that we have. We've obviously had a very good last few years, with adjusted EPS growing strongly, 39% over the period of the last 5 years, and that is continuing. The business proposition has been, I think, proven through this COVID time to be particularly relevant. One of the things that COVID did was challenge us on two sides. One is, of course, disruption to the work by people not being able to do what they did before. Well, online did really well in that period, obviously, and YOUGOV did particularly well in adjusting to that, with products that allowed us very easily to add new data pose new questions, if you like, to answer specifically COVID-related issues. And in fact, we've also done a lot of health work, so there's been a lot of upside there as well. Right now, we're seeing that as companies are coming back into perhaps more confidence, that there's been a stronger demand for that more tactical, fast turnaround type projects that weren't happening so much before, earlier in the pandemic. Meanwhile, during that period, we've also completed the transition to a client-centric account management structure in the US and the UK, which led to significant new contract wins towards the end of the period. That's what I was describing just now, the really big pieces that take a bit longer to win. That's as a consequence of a much more account management driven approach to selling cube-aligned custom. The turnaround in mainland Europe is very pleasing. We've unified all the European teams, and that's really paying off. We, as I say, continue to invest in the business. We have expanded the panel to be the biggest panel expansion we've ever had.
Stefan, apologies. I think we've just lost your microphone there. If you could just click on the microphone for me, please, and just turn that back on, that'd be fantastic. Do please bear with me 1 second while we just get Stefan back on. Thank you. Stefan, if you could just click on your little microphone icon at the top of the screen and just turn your microphone on. I think it may just be a connectivity issue. If you can just keep your camera on, Stefan, that's great. Thank you very much indeed.
Apologies, I don't know what happened there. Where did I get to? Did I get to continued investment in the business? Well, I should continue from there anyway. So we've had the biggest panel expansion since YouGov started. 15 new markets in 1 year. Not in 1 year, in this period, in the half year. We've developed YouGov Safe, with a new product, which we'll be talking about later, that allows users to generate personal value from their data portability, which comes out of the GDPR initiatives. We've also expanded YouGov Direct into new markets and integrated with YouGov Chat, acquiring new members and beginning to build a really significant platform business. We've continued the evolution of bringing our core products and services into a single platform, unifying member experience and creating interoperability between our various tools and data sets. So it has been a strong period for us in terms of developing the core assets of the company. Moving on to Alex.
Thank you, Stefan. Good morning, everybody. I'll just take you through a few slides around sort of financial performance for the half. Thank you, David. I can see there is a question that's been submitted, which I'll weave into the overview as we go through this. Just a little bit of context. We view our business with 3 major divisions. Data products is our proprietary products, which are based on our syndicated data that we collect for our own purposes, ultimately to drive subscription products. We have 2 products, Brand Index and Profiles, which are the flagship products, and we have some more coming down the path, which Sonny will talk about the individual sort of products in his section. Just the question on recurring revenue. Our data products business is a subscription business where we sell on an enterprise basis. It's not on a per seat basis. It's typically a 1-year subscription. When clients renew, we encourage them to take multi-year subscriptions. You'll hear us talk about sales backlog. We have a very strong focus of securing a lot of visibility on our revenue by using subscription products. We've had moderate growth for the period, and I'll touch on sales in a second, just because there is a slight challenge on the phasing for us. Our data services business is an offer that we give our clients where they run they dictate the questions that they would like to run, but it's a very fast turnaround service. On the client side, it's typically very short decision cycles. It can be highly tactical work that we're doing on behalf of clients. We don't have very much visibility. We recognize the revenue on delivery, and in the UK, we can turn around projects in 24 hours. But we refer to it as a service. We have a lot of repeat customers, although it's not contracted, come to us and use us very frequently. It's a relatively straightforward service to sell, typically rate card driven, to price on number of questions and types of people that clients want to talk to. You'll see in the chart on the bottom right hand side, we've had significant growth in the data services divisions. This is right across the world for us in various offices. This division has continued to deliver through COVID. We are an online business. We've been able to support clients. We've seen a shift in the type of work. Initially, as we went into lockdown, a lot of COVID related work, and now there's a lot of renewed optimism from clients, where we're now seeing that type of work shifting to more trying to understand what does business as usual look like. So we've had a fantastic half. Stefan mentioned sales. We continue to see that momentum post the 31st of January, which is the half year for us. And we certainly expect to see that growth sustaining for quite some time, in line with sort of increased sort of positivity around macroeconomic conditions. Our custom research is like data services. It's research work that we're doing on behalf of clients. but is usually much bigger in scale, in scope, and often does include a bit more time. So we have researchers who will be doing a lot more work in the pre-sales activity, trying to understand the client's specific challenge or respond to a brief. The research work that we do sits alongside data services, but at the output side, we do more analysis of that data and consultation with clients to help them to understand and use this data within the particular reason they've come to us. We just make a note here. We did have a very large contract in the Middle East, which was a planned closure last financial year. And so from a reporting perspective, we have a drag on that revenue not being in this half year. It was a significant contract in the half of last year. It was £3.5 million of revenue. And so on an underlying basis, we are reporting growth in the market. I just want to make a small point here. Just we have a shift in the way that we are selling, where the very fast turnaround work, we've been converting that very quickly, but we've been increasingly going for much larger contracts with clients, really bundling our data products and custom research together. And so when we get into the second half of the year, there's a lot of committed revenue that's already been sold in the custom division, which has been sold as a combined proposition with data products. So it's a fantastic growth in data services, which we've already had the benefit from. A lot of the sales that have happened with data products and custom research will really come through in the second half, and that has to do with the revenue recognition. Data products are recognized over the life of the contract, and custom is typically longer term. David, to your question on how much is recurring, all of our data products business is a recurring business model. About a third of our custom research is what we refer to as tracking work. It is this repeat work that we do for clients. And so the rough maths of that works out. It's 50% of our business is recurring. I'll just move on to sectors. A lot of our clients are typically weighted to technology-focused or technology-enabled clients, being an online research agency, but the number of sectors we operate in is fairly diversified. Technology is the biggest sector that we sell into. We're very pleased to see resilience across all the sectors that we're operating in pandemic. There's a few sectors which people may be surprised to have been resilient. I know there was some concern when we went into the pandemic. The media agencies, which is a big user of our subscription products, but the media agency sector would suffer due to lack of reduced advertising spend. You can see sports is continued to be a decent part of our revenue, even though sports for the most part has been closed. The most pleasing part of this is that even within sort of the large Kurdistan sort of contract coming out, we've still made progress in sectors and haven't seen any material decline across any of the overall sectors. That's not to say some of our clients haven't churned, which is inevitable, but nonetheless, very strong diversification and very much positioned to capture renewed optimism within clients as we come out of the pandemic. I just want to talk about operating profit here. You'll see on the right-hand side, the majority of our profits are generated in the US and the UK. The US is by far the biggest research market, and it's been an area of focus for us for several years now. We're still significantly underweight compared to the size of the market, and so when we talk about our future plans, continuing to expand in America is expected to be a significant growth driver for the group. I just want to pick up a little bit on the margin profile of the different products and services that we sell, in particular data products. The group over the last few years has been able to deliver exceptional operating profit growth by really focusing on technology-enabled data products, which have good visibility because of their subscription. But the operating leverage on that service is very high, in that we use a lot of automation. We are selling the same data many times over to many clients. They're able to customize elements of it, but it has a standardization in the way that clients sort of buy and use the data that benefits us sort of very greatly. You'll see that the custom margins come down. That's the impact of the Kurdistan project as they're coming out. I'll touch briefly on balance sheet. We continue to see good working capital management throughout the half, and that is a continuation of last financial year as well. The majority of our clients have not been overly distressed by the pandemic. We're a company that has no debt, and so from a balance sheet perspective, we remain very robust. We continue to hold significant cash balances. Let me just make a note here. Throughout the period and before, we have been sort of making acquisitions, bolt-on acquisitions, of which we were expecting to pay out £9.5 million in the second half. Particularly want to point out the sports acquisition that we made in SNG in 2018 has been a fantastic deal for us, and you'll have seen sports has become a significant part of the group overall. Just a few key things on cash flow. We continue to allocate cash that we generate from operations on sort of two key areas. One is panel. This is where we are acquiring panelists to join YouGov to take part. Stefan referenced the geographic expansion that we're making. We're really becoming getting to the point now where we're increasing our geographic coverage, which is putting us into a very strong competitive position in the industry as a company that can truly service global clients. We've got more work to do, but certainly within the sales that we have seen recently, we are beginning to make that step change by being able to service larger contracts with larger clients. Make the point on technology. We continue to see investment in technology as an enabler for us to generate more operating profit. And towards the back end of this presentation, we'll talk more about some of the future initiatives. With that, I'm going to hand over to Sunny, who will go through operational highlights.
Sunil, hi there. Your audio is just not coming through. Just to make sure you're there, please. If not, bear with me 1 second, please. If the attendees just bear 1 second, just while we get Sunil's connectivity back. Thank you. So if you're having connectivity issues, may I just ask you just to use the dial-in number that we've had, which I'll just send you, just so you can dial in over the top. If you could just bear with me 1 second. Thank you. Stefan, just while we get Sunny back into the meeting, perhaps I could just ask you to continue through. Just noticing as well that unfortunately I think there's a few connectivity issues out there. If you could just perhaps turn your camera off, please. Just click on the icon at the top just to save your connectivity, Stefan. That'd be fantastic.
I'm going to just answer a couple of questions while we
fantastic, thank you.
Try to come up. So one of the questions here is are we neutral? And this has been a difficult period with the culture wars. This is from David C. It's incredibly important for us to be neutral. This really addresses an ESG point as well, which I would have otherwise talked about later on. So let me just talk about that now. ESG is, of course, incredibly important to us. It is core to what we do, to our basic mission as a company. It isn't an add-on. We don't just think, oh, look, here's some nice boxes to tick and we'll do those. For us, giving a voice to everybody is what we do. But that means everybody. In order to be different to the various culture wars that are raging out there, we have to be fair and give platform to all shades of opinion, and nobody must ever think that we are on one side or the other. Now, in something like the US elections, for example, it's very difficult. Pollsters are seen as being on, or mainly on Biden's side, on the Democrat side, and that doesn't help our accuracy if we are making people turn off who would otherwise take part in polls and so on. So it is always, I mean, it worked out fine for us, but it is always absolutely critical that we take no sides in any of the issues that we poll on, and nobody, I think, could ever say that there is a bias in our polling. But if we ever showed any kind of bias, that would be a problem. So we haven't been a company that makes a lot of noise about our own opinion. What we make a noise about is other people's opinions. That's our mission. There's another question. I'll be back with Sunny, or?
Hi, can you guys hear me, Stefan?
Oh, yeah, good. I'll switch off then.
Okay, sorry about that. Yeah, some gremlins there. So I'll start with data products. So data products is, as both Alex and Stefan have touched upon, is our core syndicated product suite, and it includes our flagship product, YouGov Brand Index. We launched that in 2005, started in the UK, expanded to the US in 2007. Every single day, we have thousands of people around the world completing that survey regarding brands. We have back history going back to when obviously we started with that service. Profiles, relatively newer, launched in 2011. And we also have newer sector-specific offerings such as Sports Index and Destination Index. Pleasingly, in the period, all geographies contributed to growth. As Alex said, this also actually happened at a time when we were implementing a change in essentially our selling practices. One of the things we've always been very good at is, and you can hopefully see that in the numbers, and you can see that if you followed us for a while, is delivering sales of the core subscription product. And that singularity of focus was necessary. Sometimes these things are not the easiest things to sell because of the timing with regards to client budgets. And also we are very much seen as the challenger brand. But there was also if you will, an opportunity cost there, because actually sometimes we were also, excuse the phrase, leaving money on the table, because there were other pieces of work that we would not go for, because actually they were the kind of pieces of work we didn't want. They were low margin. We could potentially have got them, but really, we really needed to sell our core product. Now, as time has evolved, actually, we, due to the Cube, actually have a way of actually taking that low margin custom work and actually running it as a connected piece of work with these data products. And we really focused some of our resources on winning these high value, large clients. And thankfully, in the second half of the period in question, we're really beginning to see that strategy bearing fruit. However, that also meant that there was a reshuffling of the sales team, and actually in the first half of the period in question, we would say the actual bread and butter core subscription did not get enough attention, and that's something that we fixed. Very pleased to have very good numbers in March, and actually in the first period as well, we've seen some record sales months. So it's a very strong pipeline. There has been a slight decline, and this is actually linked to the number of markets in which we've actually pushed out recently. So 15 new markets. Each of these obviously does take time to gain traction, and that has resulted in a slight dip in the divisional margin. Moving on to data services. Data services is the name that we give essentially our fast turnaround research. So this is where clients come to us, sometimes with an idea, sometimes with questions, sometimes with just a brief. And what the client requires is essentially data back, and they need it usually within 24 hours, potentially 48 hours. It certainly is the leading omnibus in the UK, and we're very happy to report that we're seeing some really good growth numbers coming out from all of the regions. Mainland Europe, which has been a turnaround project for us, and at various times, sometimes being let down by one or two countries there, really firing on all cylinders, returning to double-digit growth. In the US, where this particular division has a lot of headroom still to grow, fantastic numbers there, up to 33%. And Asia Pac, which obviously was the first region to be most widely affected at the macro level by the pandemic. We're also pleased to say that the situation was relatively stable. In Asia Pac, we've actually gone through, over many years, the process of actually weaning our clients off this low margin, very laborious, difficult to repeat, certainly non-repeatable work, i.e. traditional custom, onto data services. Also, we managed to do this whilst also improving the margin in the division up to 17%. Which now leads us to custom research. Now, custom research in many companies does refer to that slightly laborious, low margin, often non-repeatable style of work, something that we have actively been cutting out of our business for many years. What we are now doing is actually translating what is custom research into something called connected solutions, and really capitalizing on the USPs that our unique methodology brings, by essentially taking our data products, taking that cube of data and marrying it up with ad hoc studies, either one-offs or also repeatable. It really is something that's quite unique in market research. This joined up strategy in mainland Europe has also delivered some pretty strong growth. Again, off the back of this cube-aligned, off the back of this cube-aligned projects. As we've touched upon many times in the release, and also Alex earlier, there was the planned closure of a significant contract in Kurdistan, which is in the numbers. And this actually accounted for some of the decline that you're actually seeing there. And also, obviously, as a result of that decline in the overall size of the business due to the reduction in Kurdistan, we also saw a reduction in the margin as some of that central cost allocation had to be absorbed. We've made significant progress on the priorities that we set ourselves when we started off, both this year and this plan. We've expanded the panel. The panel is the lifeblood of our business. Pleasingly, clients are expecting us and wanting us to go into new markets. We've added 15 new markets. What we've done on the front end for our panelists is also mirrored in the back end. We're simplifying what it means to be a YouGov panelist. There are, at the moment, various pools of panelists that we're bringing together to make sure that it's a unified, joined-up experience to be a YouGov panelist. You're not a YouGov Direct panelist or a YouGov Proper panelist. You are essentially just a YouGov panelist. We're obviously doing that in the back end as well. So where we're integrating the front end, obviously that leads to back end integration as well. So therefore, we continue to invest in our tech, our products, and our platform. Pleased to say we've launched YouGov Direct into two new markets, and we have developed and continue to develop YouGov Safe. We've also, and this is a very important point, we've continued to recruit and invest in our centers of excellence. These are really the foundations of our growth that we've seen over our initial first year 5 period and hopefully the next 5 year period. Initially started off with research operations, which we offshored to Mumbai, and we've actually now built that out so that actually every single business function and every single research function now has a capacity which is offshored in one of our CENXs. So be it Bangalore, Mumbai, or Romania. As I mentioned, we also completed the shift in our sales model, and that's obviously already bearing fruit, and you can see that clearly in the numbers in Europe. And as you've heard from both Alex and I, we are seeing that also in the US and UK. There's a couple of small acquisitions. One was geography related, so very pleased to acquire WizSite, which is a Turkish online research agency. And we've also added to our capability in sports by acquiring the Canadian sports research firm Charlton Insights. With that, I'm going to pass back to Stefan. I hope you heard all of that.
Stefan, if you mind just turning your camera off, it's just taking up your connectivity, and just, there we go, that should be fine now. Stefan, I think your connectivity there has just been a little bit slow. If you could just refresh and come back in, just refresh the browser and come back through, that'd be fantastic. Thank you very much indeed. Thank you for your patience, Stefan's just connecting back through. Stefan, when you come back through, if you could just turn on your mic and not your camera, that'd be great. Thank you very much indeed. It's just like you're having local connectivity. Stefan, hi.
Hi.
Thank you very much.
Thanks. So this goes out of GDPR, which has a requirement for people to be allowed to port their data. That is, if you ask Google or Facebook or Amazon or anybody that holds your data, they have to give you back their record of your data in a usable form. Silicon Valley and most of the world, in fact, has done an extremely good job at complying with this regulation. It is therefore easy for our panelists to request their historic data sets and then to send that to us. We pay them for it very explicitly, what it's for. Of course, this is very valuable data because it's detailed behavioral data about search, their search activity, their online activity, what they purchase, what they view, how they interact with a variety of different platforms. And we are able not only to take these data sets, but to add to it the demographic and consumer profiling data that we have from our surveys. Nobody else can do this. Nobody else can take those data sets, assimilate them into other extremely detailed demographic data. So we're adding a lot of value to the data that our panelists will give us, and then we are paying them for this. But before anybody thinks this is creepy, it would be creepy if it wasn't for the fact that in our case, our panelists join YouGov in order to have their data used. That is the purpose of joining YouGov. If you join YouGov, you do surveys, you know exactly what they're being used for. We continuously talk to people about how the data is used. We're extremely transparent. We make accountability central to everything we do. For example, on Direct, where we keep receipts for all uses of data in the blockchain, and visible and accountable. So this isn't like people fooling other people into giving their data. People give us their data for this very explicit purpose. And that allows us then to make really valuable new data sets out of that, which we have been selling in small amounts to a couple of lead clients. We now know exactly how to make this thing work. We think it's a great product and is going to do very well for us. And Alex can tell you a little bit about how things have been going so far with it pre-release. So that is an important part of our development for the future period. We think it's going to help us, along with all the other things we're doing, hitting our long-term growth targets. To remind you of those, as in with the last 5-year plan, we set ourselves nearly impossible targets and achieved them. We have, again, very seriously difficult targets, which we believe we will achieve, of doubling group revenue, doubling the adjusted margin, profit margin, to achieve annual compound growth rate of over 30%. That is our aim. We have various ways that you've heard about, including increasing our panel, increasing the amount of data that we have, winning larger clients. All of this is, we believe, contributing to us meeting our ambitions. The trading in the second half has been off to a good start. We've already mentioned a strong sales pipeline, which is weighted towards the second half of the financial year. Current trading is in line with board expectations for the full year. Strong balance sheet to support the investments that we're making. It is a resilient business model, which has not only survived the unprecedented headwinds of the past 12 months, but of course has, to some degree, we think our model has prospered because people are moving more towards online as a consequence of the disruption to traditional research. We remain confident of meeting our long-term targets. We see no material impact to date from the COVID-19 pandemic. We've taken extensive measures, of course, to ensure the safety of our employees and phased our return to office plans according to whatever the local conditions are. No employees have been furloughed or government support needed. Clients increasingly do expect their marketing budgets to deliver more. And that is exactly up our street. We have a engineered, syndicated data-based approach, which means getting more value out of the data that we produce, getting the ability to give our clients, therefore, more value, faster, more accurate. And we think this is very much in line with what the expectations of our clients now is. We continue to invest in strategic areas. That's continuing. We have plenty of cash reserves and no debt at all. And so we think we're in a very strong position to keep going on the trajectory that you've seen we've achieved so far. Thanks. Let's go to questions.
Fantastic. Stefan, Alexander, thank you very much indeed for that presentation. And just to say, ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via Investor Dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation is ended, you'll be redirected for the opportunity to provide feedback in order the company can better understand your views and expectations. So look, I think I'll address these to you. Obviously, we've had a number of questions come from investors during the presentation itself. If I may hand back to you just to read out those questions where it's appropriate to do so, that would be fantastic. Thank you.
Okay, sure. Thank you. So I think we're going to try and answer as many as we possibly can. So let's start off with a question from John. Question for Stefan. How many markets do you currently operate in?
Yeah, that's 59 countries where we have panelists with offices in 21 countries. Now, I just want to just add one thing to that simple number, the simple numbers, that we do not need to have offices in a country to do research there. The research is done entirely online with our panels. That's 59 countries in which we can run all of our products if we so choose. Not all of our products are run in every country, but 59 panels, but 21 offices. Those offices are obviously in places where we think it's advantageous to have local presence.
Thank you, Stefan. Alex, I think you answered the first part of this question, and if you answered the second part, I apologize. This question from David. You answered the question about what percentage of your revenue is recurring revenue, but how much of our revenue in the last 6 months has come from companies that have never purchased from YouGov previously?
Let me also weave that into, there was a question on what did the business look like 5 years ago? Because we are changing the profile of how we want to sort of go to market. So 5 years ago, we were very people, most of the work that we did was really focused on people delivering. Now we're very much in a position where it's really the data that delivers to our clients. And so when we were sort of primarily sort of heavyweight in small C consulting, we're not like Bain or McKinsey type, but sort of research directors selling into clients, relational selling, and those same teams deliver that work is a very difficult business to be in. So when we're looking at how are we changing over time, really we're actively trying to get clients to come, and if they're subscribing to the products, they're obviously they're using our data continuously. We see them all the time. But in targeting tracking work, we want to be having sort of continuous or monthly or quarterly data going into our clients, and obviously bringing in new clients, but keeping those subscribing and tracking clients continuing, because ultimately it continues to build significant revenue momentum for us. How many clients come and go is a little bit difficult because of the nature of our data services business, which is relatively low price point. You can come to the UK. You can come to our. You can come to us in the UK, and for between 900 and 1,200 pounds, you could run a very short survey. So you do see some clients that dip in and out, but in sort of a broad sort of trend is about 80% of our revenue comes from existing clients that we have had some interaction with over a 12-month period, and about 20% of that is new. It's slightly confusing this. It's not always new. It may be a client that did something 2 or 3 years ago and comes back because they're doing a relatively small business. So the very much part of our strategy is continuing to take a land and farm approach, where we bring clients in, increase the number of services that we can sell into them, and increasingly, as we've been sort of touching on the platform, increasing our new business coming through in a much more scalable way by using sort of marketing channels much more effectively than we have.
Thank you, Alex. I'm going to give you guys a rest and take a question for myself, which is this question from Jeff. How many panelists are there globally, and where do you see that figure in 5 years? So Jeff, I'll tell you the number. It's using industry standards. So just under 4 million. Now, the reason why it's not such a straightforward and forgive me for giving you a slightly convoluted answer, we have never, and many companies do this, we have never gone out and claimed to have a figure of 30 million or 40 million or 50 million, which actually we could pretty easily, because that's the number of people, I'm sure, over the last 20 years who ever shared their contact details with us. That number is absolutely irrelevant. It's the people who you have the right to, people who are actually taking your surveys. And that's the number that we quote. It's people who take our surveys in the past 12 months. And that number is...
So, hi, I think we just lost you again for connecting.
It's about people who are in that number actually having surveys to take, and and those people, keeping them engaged. There's no point us building a panel of 10 million and only having enough work for 2 million. We've just wasted a huge amount of shareholder money there, quite frankly, on recruiting 8 million people that we didn't need. So we actually always are very prudent with how we're spending our money when it comes to building panel. There's no point building panels and not having work for them, essentially. So therefore, the question about where do we actually see that number in 5 years, it's actually quite a difficult question to answer. And I'm not trying to be evasive. We're in most of the main markets where we would want to be. Some of it's going to be driven by how successful we are in those markets, especially the newer markets. And some of it will actually, you know, for example, in the UK, you may see where actually it's a relatively established panel. The size increase on that panel versus a panel that we just built out in Brazil being quite different. So it's a little bit difficult to crystal ball gaze on that. Obviously, a bigger panel for us means that we've actually been successful in making sure that people have the work to do. So it's a slightly nuanced question and quite difficult to give you an absolute kind of straight answer in terms of numbers. But rest assured that, you know, well, it's not about quoting the biggest number possible for us, because actually we think that's actually a bad thing. I'm going to give another question here to Alex. If you don't mind, Alex, this is a question from David. What returns on capital are you targeting on new investments, IRR and payback hurdles, etc.?
A very good question. I'm going to give you a slightly vague answer on the IRR, because the way that we approach investment is to try do things incremental. So you'll see throughout the past, we talk regularly about technology investments that we make. In particular, when we're spending money on R&D, we have two objectives. One is to augment what we're already doing. So from a risk perspective, we'd like to see payback hurdles being within 1 or 2 years, just because that work can immediately reinforce what we already have in place. And then there's a sort of a bigger upside that we're targeting. But that upside usually comes by putting this piece of technology and investment into everything else that's already been built. So if you can imagine, it's sort of the roadmap has lots of interrelated sort of investments that we make. The SAFE project that Stefan talked about very much is in that vein, where we're building on obviously the panel assets that we already have. We've put a small team together to be able to sort of start collecting that collecting that data using GDPR-like protocols. That data is immediately useful when put into the context of data that we've already sort of collected, and we were able to commercialize that very quickly. We commercialized that in a minimum viable product. So in some respects, our initial investment was paid off within a few months. We then look at that, and then we go again. We look at where else can we, and what more do we want to be doing here, and we build up. There's a question mark around how much do we spend on R&D. It averages about 5 to 7% of revenue. It is a place where we constantly are trying to bring sort of people in. It is typically headcount. It's developers that we're hiring. It's a distributed team which is working on either very, very core systems like a survey system or an analytics platform, or sort of in slight air quotes, these incubator initiatives, which are very much in line with sort of continuing our growth trajectory into the next coming years.
Thank you, Alex. Stefan, if you're still with us, I mean that because I know you've been having some internet issues. What are the main macro trends that you are leaning into to deliver future long-term growth for YouGov? How would you describe progress in the recent new initiatives such as SAFE and Chat, etc.? And that's a question from David.
Yes, I mean, obviously we've begun that answer. Just to add a bit more, I mean, we do see this as a platform business. A platform business that is emerging from a data products business, if you like. I mean, the YouGov Chat is a way of reaching lots of people in a low-cost way in things that interest them, where they are, if someone is in YouGov Chat, they are automatically also become part of YouGov Direct and can receive paid tasks, paid surveys, and so on. And then the self-service platform of Direct means that we have many ways for the public to talk to YouGov. All of those ways feed into the same database, which clients can then access to get not only the data, but to talk to the people on the other side using self-service surveys and things that go beyond surveys, marketing tasks, and so on. This is a true platform business. This is how we are developing in the company, which is very much in the direction of those macro trends. Those trends I see as being, first of all, a sort of total, near total move towards the internet in these kinds of matters. The privacy concerns and security issues that are connected with that, where we are using blockchain as an accountability tool to keep a receipt of all uses of data, and addressing that way the ability of our panelists to also control how their data is used, at the same time as opening up then communication directly between clients and our panelists through that secure and anonymized platform. This, I think, is very much on the third trend, macro trend, if you can call it macro, in our industry, which is increasingly towards automation, towards self-service, and having rich connected data involved in that as well. So all of those things are things that we have been in the front edge of in our industry. We weren't the first to do online research, but we were the first to do accurate online research. Nobody before us had done two things. One is shown continuous accuracy based on mathematical modeling. That was started back in 2000, where we were establishing accuracy rates with external events within 1%, and this building up of data sets over a course of time with an engaged panel that trusts you to hold more and more data about them, allowing us to create connected data products. These two areas of accuracy and richness of connected data are YouGov distinctive, unique things to YouGov. There is nobody else that challenges us in this area. And as our industry becomes more demanding and more sophisticated, we believe we are on absolutely the right side of these trends, and we are continuing to lead the way there by being a technology-driven company.
Thank you, Stefan. A question from Michael. I'll take this one, Michael, and I'll build upon what Stefan just said there. The question is, you mentioned cube-aligned and connected data solution offers. What are these offers, and are they in line with the continuous contract theme you outlined? So what we mean by cube-aligned is, so as Stefan mentioned there, YouGov's USP is that we've essentially built out this cube of data, and this profiling data. Let's pick an example there. We may have asked one of our thousands of our UK panelists, actually hundreds of thousands, questions around their media consumption. We will know how their media consumption habits have changed since we started asking those surveys early in the last decade. And a client, maybe a media agency or maybe a automotive client, subscribes to that data. So let's say pick a brand. Let's pick Ford. Ford is subscribing to our data, and Ford is able to see exactly how panelists have rated their brand since 2005 back in the UK, and exactly how all of these people consume their media. Now, they've subscribed to that service. That's a continuous contract. So 12 months, it recurs. Maybe they've signed up for a longer period of time. Now, actually, then Ford launches a new product, a new car, and they really want to find out what people think of this car. So they say, okay, well, let's interview 2,000 people or 5,000 people in the YouGov panel. Now, they've interviewed those people and they have all of their answers. But actually, where it becomes really powerful is if they can now tie that back to how these people actually consume media and what they actually think already of the Ford brand or Ford's competitors, or I mean, there's hundreds of thousands of variables in this data set. That's connected data, and that is incredibly powerful, and that's something that we are uniquely positioned to offer because of the richness and the history of our data, and that's really where the continuous contract theme comes in. We have clients who are buying continuous syndicated data. They're now able to expand, or we are able to expand beyond that subscription piece to really hoover up, hopefully, a bigger share of their research spend and the profitable research spend, because we can do this on the platform that we've built. Question for Alex. We're currently on the AIM market. Will you look to move to the main market in future?
I think for now we're very happy being on the AIM market. I'll also pick up as a question around free float. Less than 10% of our shares are tied up with management. We are a company that's primarily held by some large institutional investors. you may have noticed there's often not a lot of liquidity in our in the stock. That's in part so large holders have been with us for quite some time. At this moment in time, we don't have any plans to move. I'm going to try to reference a couple of things in here. Our growth plans are very organic, are highly organic. We are looking to make acquisitions, but we are not at this moment in time contemplating going to the market and raising money, which could be a catalyst for moving. But it is one thing that we do continue to monitor as we get bigger. It is a question that we ask ourselves increasingly, but for now, we are happy on it.
Thank you, Alex. And Alex, we're about to run out of time, so possibly the second from last question. Question from Jeff: what kind of panel recruitment costs are considered CapEx?
Okay, a little bit of context. You may have got a flavor for this, but the people who join YouGov to take part in surveys really is the USP of this organization and is a significant driver of value for us. And so we actively recruit, typically using advertising channels. We're not advertising the brand, we're directly targeting people to join. And typically we see people join the panel, and the panelist economic useful life is 3 years. So we have a combination of affiliate partners, which we pay to help recruit. We use digital advertising channels where the advertising spend, the AdWords, will be capitalized. We then monitor sort of panelist behavior, and we're amortizing that over a 3-year period. Some of our panelists do stick around for longer than that. Increasingly, we might see in new panels they might be around for a shorter period of time. So we will be accelerating some of that amortization, but for the most part, it averages about 3 years, which is why you'll also see, as well as the capex on panel, there's an amortization charge as well for that.
Thank you, Alex. And I think this is probably the final question, and maybe I can start it off. Alex, you can add in the color, and maybe Stefan can say some words at the end. Question is from David. It's about Asia Pac. Is it going to be a bigger contributor to revenues in the future? I can start us off maybe just by saying operationally, obviously Asia Pac is our newest region, and actually, obviously, along with that, we are less mature in the markets, even with the bolt-on of Galaxy, than we would be in some of the more established markets like UK and US. However, it has been a significant area of investment over the years. Very strong management team. We're seeing increasingly our clients in the US, when they're buying across multiple markets. Obviously, there's large clients in Asia Pac as well. So increasingly, it's an important part of the group. Alex, and maybe talk about in as much as you can in terms of how that might play out in terms of revenues.
Yeah, I think we're getting the benefit of having some strong sales in, particularly in Singapore, where we have regional buyers. We're getting a multiplier effect of selling multi-country work. So that helps us get scale in a region where price points for research are typically lower. We're seeing good growth in Australia, and from a macroeconomic perspective, the economy there, the research spend is definitely increasing. I think long term, we expect to see a continuation of international clients spending more in the region as well. So we're fairly confident we'll see increased in-region revenues as well as international buyers increasingly wanting to understand the region more.
And then, if I can wrap it up, then Sunny, if indeed the Asia Pacific is a good region for us and is growing well, but I want to reiterate at the end that by far our biggest opportunity remains located firmly in the US. The US is the biggest by far buyer of market research, and our strongest clients are there. Our fastest growing clients are there. The business is growing fastest in America, and it's very much on the sophisticated end of the buyers. They are looking, I think, in the US more than anywhere else for the kinds of strengths that we have. We had a great election there. We had a significant increase in our profile, not as big in America as we are in the UK. Sorry, we are in terms of revenue, but not in terms of visibility. But our visibility has become much stronger in the US. So although we're now pleased to see us making good headway across the entire globe, it is very clearly the US that remains our biggest market and our fastest growing market for the future. Thank you very much, everybody. That's been really good, and apologies for internet issues.
Thank you very much, Stefan, Alex, and thank you very much for addressing so many of the questions there. And of course, if there's any further questions come through, you'll be able to review those post-event, and they will be published on the Investor Meet Company platform. Stefan, thank you very much for just wrapping up, and thank you for the rest of the team for updating investors today. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from our website, the feedback page will appear in front of you. If you've accessed through the link sent you in an email, you simply be asked just to log back in, which takes just a couple of seconds and be greatly appreciated by the company. On behalf of the management team of YouGov PLC, we'd like to thank you very much for attending today's session. That now concludes today's event. Thank you very much, and good afternoon to you all.